Hey guys, in this video I'll talk you through the basics of Japanese candlesticks and how to identify your marubozus from your dojis. There is one candlestick that we're going to quickly take a look at before we head into today's video though, and that is of course the subscribe candle, often seen after the like button on this video and used as a confluence for being a generally profitable person. So with the most important candle out of the way, let's get into today's video. Traders have been using candlesticks to understand price action since the 18th century, when they were developed by Munice Homer, who was actually a rice trader. Since then, Stevenson brought them to the Western world with his book on Japanese candlestick charting techniques, which was published in 1991. And since then, they have been the most popular method of understanding price action within the financial markets, especially within the CFD trading side. Now, let's take a look at candlesticks in a bit more detail. When you're looking at candlesticks, there are three key factors that you can use to help you understand the price action that has occurred during the given period of time that you're looking at. First of all, we need to take note of the colour of the candlestick that we're looking at. Most charting software will show bearish candles as red and bullish candles as green. The second point that you need to take note of is the size of the body. When we discuss single price action patterns later in this video, you'll learn how to differentiate your marubozus from your dojis. The last point to take note of is the length of the wicks at the ends of the candlestick. These wicks can provide a brilliant insight into the strength of rejection from a level or how much indecision there is within the market. One of the best concepts you need to understand in order to utilise candlesticks effectively is that candlesticks will show you the mood of the market. If you identify a bullish marubozu candle, apply the intuition behind this candle, which is that there is a strong buying pressure in the market, and trade using this knowledge rather than just entering because the candle is present. Candlesticks that will be classed as the same thing may just indicate something slightly different, such as one may show stronger momentum than the other, but both are thrown under the same umbrella. Make sure you have your analytical hat on and always look for the mood of the market, which will be shown in the finer details of the candlesticks. Now let's break down candlesticks a little further. When you cycle through the different time frames, probably on TradingView, the candlesticks represent the price action for that given period of time. For example, if you're on the daily chart, one candlestick will represent 1 day of price action, whereas on the hourly chart, it'll only represent 1 hour. Here is a bullish candlestick with the open, close, high and low labelled. Similarly, here is a bearish candle with the open, close, high and low labelled. Now let's take a look at what these actually mean. Candles with long wicks will show us that there was a lot of market activity away from the open price and close price of the candle. If the candle has short wicks, then it suggests that market activity happened near the open and close price. In general, the length and direction of wicks will tell us a quite detailed story about what happened during that period. For example, this candle right here has a longer wick at the bottom of the candle, suggesting that price rejected this lower area of price as buyers deemed this price was too low. However, if we take a look at this candle, the wicks are almost non-existent. This suggests that buyers took control during the whole session, and sellers didn't really put up that much of a fight. When candlesticks have short bodies, it suggests that there is a lot of indecision or a lack of market activity during the period that the candle was open. This might be in no man's land, a term I use for price being in the middle of nowhere with no clear directional bias of where price will actually go next. However, it could possibly just be that we're in a trading session where volume trade on that pair is low, so price isn't really doing very much. On the other hand, if the candlestick has a long body, then it suggests that there was either strong buying or strong selling pressure during that time that the candle was open. You usually see these candles around news events or during high volatility times of the day. Before moving on, it's definitely important to highlight that just because we factor price action and candlesticks as a confluence, we should not be using them as the sole reason for entering a position. Always make sure you combine price action with other confluence factors such as trend lines and dynamic support and resistance levels in order to boost the profitability of your trading setups. The important thing to remember about candlesticks is that they give us a great indication of how strong moves are in the market, and they can also indicate if momentum is behind these moves. Now let's take a look at several different single candlestick patterns which we can use to aid our decisions of whether to enter the market or not. Doji candlesticks show us indecision within the market, but not all dojis will appear the same. However, they do all have similar characteristics that enable you to spot them pretty easily when you're scrolling through your charts. As you can see here from the example, dojis have a medium to long wick and have very small bodies. Dojis are the ultimate indecision candles due to the fact that there is hardly any difference between the open and the close price. Yet the medium to large wicks mean that there's been a lot of battle between the buyers and the sellers within the market to try and move the price, but neither have really been able to take control. Relating this to momentum, a doji typically suggests that there's very little, if any, momentum left in the move. The four types of doji are the long-legged doji, the dragonfly doji, the gravestone doji, and the four-price doji, all seen here on the screen. Spinning tops are the next type of candlestick that we're going to take a look at. They have short bodies and long wicks that represent indecision between buyers and sellers. Often spinning tops will not form perfectly. It is far more important to keep in mind the intuition behind these candles, which is that they are continued indecision in the market, rather than just try and spot the exact setup. Mariborgi candles are the opposite of dojis because they give us a clear indication of who is in control during the period that the candle is open. They indicate strong momentum from either buyers or sellers depending on the colour of the candle. It's often the case that we see marubozos appearing when key levels have been broken or where price is pierced through a trend line. Let's now take a look at a collection of candles called Pinbars, which is a general name for candles with significantly larger wicks and bodies. A pinbar shows how price has moved away from the candlestick open, pushed in one direction, and then returned to around the entry price. Let's take a closer look at the different types of pin bars that we might see when trading. The first candle is the hammer, which is often found following a sustained downtrend. It signifies a likely reversal at the upside, as sellers have pushed price down, however buyers have entered the market and prices managed to close near or above its open. The hanged man is the total opposite. This is found at the end of an uptrend and shows selling pressure is beginning to rise as sellers have pushed prices down and prices close near or below the open price. We then need to take a look at the inverted hammer candles. This is also a bullish reversal pattern which is formed typically at the end of a downtrend and would suggest that price is beginning to reverse and become bullish. The last type of candle that is in the pin bars category is the shooting star. This is a bearish reversal pattern and is also found at the end of an uptrend, meaning that price is likely to go down. The most common reason that we use candlesticks is to evaluate price action's reaction to the market structure that we've just seen. When you see a long wicked candle forming, such as a shooting star, it's important to clarify that this pattern is indeed forming at a strong support or resistance level. A price action pattern should be used after a level structure has been identified, not the other way around. Generally, a long wick tends to indicate a strong rejection of an area, and hence longer wicks are preferred to shorter ones. If we see consecutive long wick candles at an area, this provides further confidence that a level will hold and as a result form a rejection. Engulfing candles follow an area of structure. They typically suggest that price has rejected a level and could signify the change of a trend. If we see an engulfing candle following a long wick candle at an area of structure, it's typically a good sign to begin looking for entries. It's just a textbook rejection of an area. Before rounding up this video, let's take a quick look at some of my top tips for price action trading. My first top tip is always use price action to provide an additional layer of confluence to your strategy, rather than just jumping blind into a trade purely based on the candlesticks. If you do jump into your trades based on one candle, you may end up being caught out by a fake out, or you might be going against the longer term trend within the market without actually being aware of that. My second top tip is to look for these candlesticks on the higher time frames. We want to be looking for these candlesticks on the hourly time frame rather than the 1 minute time frame, as the higher time frame candlesticks carry a lot more importance than on the lower ones. That's about all for today guys, and I hope you've enjoyed today's video. Like all of the early lessons in this series, we'll be diving much deeper into types of candlesticks later in this series, so make sure you hit that subscribe button and like the video if you want to keep up to date with when the videos will be released. Cheers guys, and I'll see you in the next one.